welcome to Smart Investment Journeys. This podcast is part of a series designed to help you along your investment journeys. Edition of Smart Investment Journeys. You got a real treat in store for you today. On my left, Art Johnson, a founder and CIO of SmartBe Wealth. My name's Rod Hurd. I'm CEO and founder of SmartBe Wealth. And today we have our US partners in town. We've got Wesley Gray, Dr. Wesley Gray, who is the Chief Executive and Chief Investment Officer at Alpha Architect. Welcome, Wes.
Thanks for having me.
And Ryan Kirlin, who is the head of their marketing department at Alpha Architect. Welcome, Ryan.
Thank you.
So today we've got a real special show in store for you, and we're really going to try and unpackage the story about Canada and ETFs, and why a leading group of quant fund managers in the States would be interested in bringing their strategies to the Canadian marketplace. So Wes, maybe you could kick us off here by telling us a little bit about Alpha Architect's history, how you got interested in quant investing, and the Alpha Architect journey in the States right now.
Sure, I'll just do the quick recap. So we'd always been into doing research and publishing papers and books, and we ran a blog a long time ago. And we happened to have one reader who was a billionaire, and this guy named Eddie Stern. He called me, and they were in the transition of going from owning pretty much every hedge fund in Wall Street to saying, hey, that's a bad idea. We want more transparency, more control, more understanding of our process and what's going on. And he just called me up and said, hey, I've been reading your stuff. I like what's going on. Can you help me and my family office achieve that? And so, start off with me, then Jack, who's another gentleman on our team.
Were you still teaching at Drexel at that point?
Yeah, I was still professing at the time.
And so the blog and everything was just in your own times, sharing the love.
Yeah, well, I just always done it as a disciplining device to read papers and then make sure I actually paid attention. It turns out, a few people were reading it, and just one happened to be really rich. And so we got into that, started doing consulting with them. And the concept was, hey, Eddie, you're a gazillionaire. I love helping you out here, but we'd like to get an asset management business. And so if we do a good job helping your office kind of transition to this new world, would you be willing to seat us? And so we did 2 years of the consulting thing. And then in 2012, they seated us in the quantitative value strategy, which went to 50 mil. And then we just kept, through inbound marketing and putting education and research out there, people would find us, and we just, one thing led to the other. We just, got in the ETF business in 2014, and now we have over $1 billion down in the States. And it was all driven just on this main mission of, we want to empower investors through education. We want to make sure people understand what they're buying when they come to us.
Is it a fair statement? I know I've drunk the Kool-Aid, but is it a fair statement to say that you guys are recognized by your peers and by the market in the United States as in that top shelf of thought leadership in quantitative investment?
We'd like to think so, and we certainly hope so, but you'd have to ask the community. I do believe we definitely have we're in the tiers of people that are acknowledged as being very helpful in educating the professional finance market about factors, quant, and everything we write on our blog about.
I'll interject for a second.
What
I find fascinating about what Wes is doing, and because there's a lot of academic research out there, but through the Alpha Architect guys, there's also just this love of investing. And so not only are you getting the academic side, but you're also getting this less of a kind of a religion, tautology, which can come from academia, but it's put in a practical way. So a practitioner or a person who loves investing, it's curated in a very unique way. And I think that's why Wes has really caught the ear and the attention of the people in the community. And he does it in such a brilliant way, because at the end of the day, Wes loves investing just as much as we love investing, and that comes across amazingly well.
No, I mean, that's certainly the case. We don't invent all the ideas, but we actually just love finance, and everyone on our team is just passionate about it.
Nice.
And just because of the internet and the ability to access a community, turns out there's a lot of other finance geeks out there.
Yeah.
and yeah, that's we have our Canadian finance geek who also found us via our education efforts.
I'm a finance geek in training.
Yeah.
So Ryan, help us understand. Your career started on the New York Stock Exchange. I think you have been immersed in ETFs your entire career, and had a trajectory of innovation and of top tier companies. How do you, as a guy that's in this big tier 1 sphere, end up at Alpha Architect?
Yeah, so for me, I think it's a little bit like you hear the old expression. It's you want to surround yourself with the smartest people you can. It's good if you're the dumbest guy in the room. I'm firmly the dumbest guy in the room, so that's good. And but so yeah, I started off.
This room notwithstanding.
Yeah. I just followed I'm a little bit good, I guess, at following the trends of asset management and where it's going, and I started off at the New York Stock Exchange. When I was there, about 95% of the ETF market in the US was market cap weighted. Then it evolved to these like slight tweaks on market cap weighting, which we at Alpha Architect would call closet indexing, meaning you're just kind of putting maybe a value tilt or something like that, but just a very small tilt. And then I met Wes at 2014 at the Morningstar ETF conference, and the question that Wes and I ended up talking about was, if you believe in a certain characteristic, right, and that's all factor investing is, it's just a characteristic. So if you believe in a characteristic of a stock is good, such as this stock is cheap, and we think that's a good characteristic, why would you own stocks that are not cheap, right? Like, why would you own all of that market, even if you're tilting towards the cheaper stocks? Yeah. Let's just go only own those cheapest, absolute cheapest stocks, because those, if we think, and you can debate that part of it, do we think that characteristic is a good characteristic or not? But if we do agree that that's the a preferred characteristic, let's own that all the way. And then that's how I wound up then at Alpha Architect.
Nice. So I want to keep it on the U.S. side and the Alpha Architect side for a while, but Art, I want to bring you into the conversation. So you're a quant guy practitioner, portfolio manager, running quant strategy since 2003. I would suggest probably one of the pioneers in Canadian quant and factor investing and ETF investing. How did you identify Alpha Architect as the partner of choice to approach and nurture and try and establish our relationship that we've created?
Yeah, it's a great question. I think I did exactly what Ryan did. Once you start to get into this field, and it gives you tremendous strength from the standpoint, you have evidence on your side. When you're in the advisory business, in this business, it is very difficult because a lot of times you're being pushed in ways that you don't really notice in various things. There aren't many treasure maps on how to do things right. So when the evidence around factor-based investing came out, I had been a professional floor trader. I'd seen both types of behavioral finance. I'd seen behavioral finance on the floor, and I saw efficient markets. So it made absolute sense to me. Similar to Ryan is what happens in the marketplace is you will go out and you will see people talk about academic factors. And they make eminent sense because the evidence is there, the structure's there, but then the product is just maybe 10% of what's supposed to be done.
Exposure to the factors.
So you start to get a very kind of disingenuous, not good feeling. Like, you're helping people, but the marketing department has come in and basically said, well, let's not go full on what the evidence should be to help these people because, we still got to sell this stuff. So I had a journey where when I started to look for other factors outside of what we could get into Canada at economic prices, the biggest factor that I didn't have an understanding of was momentum. And there's a lot of controversy around it. It's a behavioral factor, and there's a battle between kind of traditional finance and behavioral. But the guy that was always a go-to person for me is a guy named Larry Swedroe. He's written numerous books on factors investing.
BAM Alliance.
And I'm not that smart, Rod. So if I need something cool in the States, I would phone Larry up, and he would guide me in the right places. And what was fascinating is Wes's name always came up. And then I started to do the same investigation, reading the blogs. But more importantly, it was this belief that we all kind of came from the same place on the evidence, but it was really man, it doesn't, even the good guys, and I think most factor people are pretty good in their beliefs in various things, versus say an active manager that's all over the place. Is good or bad is maybe not the way to think about it, but factor guys know kind of what the recipe is. You were getting distillations of the recipe, and it was, well, why are we doing that? Let's really go the way Wes did. And I, kind of like Ryan, I feel much more comfortable when a PhD is telling me to do that with the data and has thought through what the other guys are doing. And that was a seminal piece, is I had always done factor investing with academics.
Yeah.
And I think that's a big part of this, because when you're looking at data, it sounds very complicated, but it isn't. But Wes, I know, has been put through the rigor of the University of Chicago, where he just got pounded on by really smart people to do data in a way that I can't even imagine doing. So that rigor gave me a much higher sense of ease going into some of these areas. And then it was just like-minded people trying to do the same thing. The one thing about the factor community or the ETF community is, I think the one thing that will always be fantastic to me from that community is, I think everyone in the community believes that when you look at the data, every investor can have a successful investment experience. And that has been articulated to me through all of the academics that we dealt with. There's a big confusion of why people do kind of crazy things, but the data, if you look at it and follow it and be sustainable with it, it means everyone can have a successful investment
That's the
experience.
key, is the sustainability, isn't
Yeah.
it? Yeah, absolutely. Okay, so why don't we shift gears a little bit here and start to get a perspective on the Canadian market space. So you guys are down there growing your AUM to $1 billion, differentiating yourselves in the academic side of things, in the education, and the transparency, and you're actually playing with the big boys, and the big boys are looking at you, and you're looking at this, you're meeting Art, and Art's met a bunch of people in the community, and we're starting to talk about Canada. So what are you distilling in that around, should we be going to Canada? Should we be sticking to our knitting in the market in the United States? Is the environment totally different? How did you guys sort of approach the decision that you came to choose to be an index provider to a Canadian group?
So we generally, just because of our reach out in the broader world, we get hit up from everyone you can imagine to do partnerships in this country or that country. But, we're not Vanguard or iShares here. We're just a boutique shop trying to do a very niche research heavy thing. We don't have monster sales force because we just do research and put the word out there, right? And one of the areas where we got the most kind of traction and the most interest from a lot of people north of the border in Canada. But, it was one of those things where we just weren't able to easily service them unless they could only use our current stuff we had in the States. Mm-hmm. So we'd always known there was a lot of demand up there, but we weren't in a position to go, redo all the fund structure, the compliance structure, and we just didn't know the regulatory environment up there. We knew there was a demand and a desire just through our own inbound marketing efforts. And it was really a decision of, well, do we just do this ourselves, when the time is right? Honestly, we never really even thought of doing the partnership thing. But Art reached out, and it's one of those things where if you find a good fit, and we always say we always want to do business with people that believe in the same stuff. And our kind of core beliefs are transparency, evidence-based, systematic, and win-wins. And Art, he was also a finance geek, so we started hitting it off, and he wanted to be transparent, evidence-based, systematic, and looking for win-wins. And I'm like, well, shoot, we believe in the same thing. Let's put something on a napkin here and see if we can turn it into something bigger. And it was just, it was kind of a meeting of cultures where it made sense, and we could provide the intellectual property of what we've been doing down south. And then, SmartBe could be the regulatory fund sponsor in the home market where they'd have more competitive advantage and better understanding of what was going on, basically.
Nice. Well, I for one have to admit that I'm really happy that the back of the envelope, the back of the napkin conversation had happened, and we're thrilled to have you guys as our partners.
Yeah, very much so.
Let's talk about the Canadian market. What are the similarities and differences, Ryan, for you? Similarities and differences between what you're seeing is happening in the States and what's going on up here in Canada.
Yeah, it looks like it's about 5 to 10 years behind in terms of product development in Canada than it is in the U.S. But it's really interesting in that the market seems to be evolving the same exact direction from how it evolved in the US over the last 10 years. It looks like we're right about there in Canada. But the difference is why I say 5 to 10 years is because Canada now has the roadmap. Like we can kind of see where these products are going to go, or what the market at least seems to believe is the best structure for products based off of asset flows. So the Canadian market could kind of accelerate things in their own market and get there a lot faster. And by the evolution, I mean away from high cost, non-transparent mutual fund structure
Or hedge fund strategies.
or hedge funds, other non-transparent things, to evolving to then it is market cap weighted ETFs, and then it takes kind of this next leap to what we would call closet indexing, benchmark hugging type products. And then the kind of the final step, because it's really as far as you can go theoretically, is like a concentrated factor exposure. So like that is kind of the final step, and maybe Canada can kind of leap that middle step and just get right to the barbell of market cap weighting, which is great. Like there's huge benefits to like super low cost market cap weighting combined with maybe satellite positions or whatever of more concentrated factor exposures.
Wes, anything to add from your perspective? What about the big bank oligopoly up here? How do you guys think about our big five?
Yes, I mean, we don't think too much about it because we don't have to deal with them, but it's certainly like...
That's your guys' job. You better solve that
I
problem.
mean, any marketplace where you have like a monopoly power, they're going to obviously have a lot of vested interests that may not be in the best interests of the society at large. And usually you can break that down obviously through competition, which is what happened down in the States, where the banks were obviously trying to hold on to everything, but just for whatever reason, our structures... competition was basically able to envelop them and defeat them. Yeah. And that's why our market is so much more robust and differentiated in at least investments and competitive. Yeah. Whereas I think that could happen up here, but you guys have a much more concentrated market that controls financial services. And as we've seen through the history of time, like one concentrated entity with a lot of control and a lot of power, they clearly don't want to lose their competitive edge of being able to extract rents from society. So, I don't know how that all plays out, but it's going to be a tug of war between vested interest and efficiency. And it seems like over the long haul, efficiency does win out, but the timeline of when that happens it's anyone's guess. Really.
There are also some marked differences in the Canadian market that they don't have in the States. The States may have more structural things, but actually to get on
diversification.
Yeah, but to get your product onto it's not Merrill Lynch anymore, but Bank of America, you have to pay to play, where you don't have that option in Canada. So advisors here can be a discretionary manager at a bank, but they have open architecture to buy whatever they want. That's almost crazy to these guys. They're like, wow, they love that. Yeah. So in some ways, the bank owns the turf, and we all know through fintech and various things, there's a massive disruption coming. Let's face it. The old way of doing business is not going to be doing. But in some ways, actually, our ability to get to the advisors in Canada is so much easier than they have. So.
Interesting. So what about the recent acquisition or business transaction that Royal Bank, who is the largest bank in Canada, made with iShares, one of the largest worldwide ETF providers, that is basically to us as a public saying ETFs are here, they're real, and it feels like the Royal Bank is willing to cannibalize a very strong and robust historic mutual fund market. How does that play out in the dynamics in people's? Obviously, we can't look into the future, but what might the signal teach us?
Yeah, I guess there's conflicts of interest, and that the biggest advantage that ETF companies in the States had is the ability to rethink how asset management can be done. Yeah. And that we see in industries again and again and again when they reinvent. It's like the music industry went through it, right? Whereas you used to have to buy this CD or this record or whatever, and then the MP3 came out and it totally disrupted how artists got paid. And at first it was like awful and terrible, and now it's like, oh, this is so much better. This is so much cleaner. I get it, right? And now, so with ETFs, that's the biggest advantage. That's the enduring advantage that companies that are starting up with ETFs only have. They don't have all that baggage. Some of that baggage is awesome. Some of that baggage means you get to you got your pipes wired in, you got all the relationships, that's great baggage. Some of the baggage where you have all these high costs and you have these high fees, so you can't, you're just being strangled, where you can't lower your fees. That's not a choice. That's bad baggage, right? So, and we could go into 1,000 different examples of that, but that's one. So that's gonna be the more independent advantage. Is
what I really liked about that message was, it's very evident that the package of the ETF is so much more beneficial for the customer, that when you were talking about the music evidence, it's almost as if the noise of the corporations was completely eliminated because the customer experience became so great, and then it just got accepted, and the entities and the infrastructure and the powers that be had to manage through it. And so it kind of feels like there might be this sort of renaissance of, certainly all of the advertising that we're seeing in the marketplace right now is about, are you paying my fees, and the disruption is here. So have you seen evidence in the States where the public in general is going, this vehicle is just touchdown awesome compared to what it used to be like?
Well, yeah, the package is arguably better for ETFs versus mutual funds, but the bigger thing is that's okay, we could debate that. There's certain investment strategies that are better in a mutual fund wrapper. The biggest advantage, what I'm saying, is just simply that the culture changes, the mindset, the mindset of the business. We're all in it to get rich. Everybody wants to make money. We're not running a nonprofit here, but it's how can we find a way that everybody wins more, right? And that's the culture, and that's the real difference. Forget about the rappers, forget about that kind of stuff. It's it's the culture of transparency, and trying to base around evidence what's going to help the client the most, and you can be wrong.
Yeah, that makes a ton of sense. So Art, you've jumped off the cliff. You're in the safety net of one of the big five, and made the decision to, boldly go into the independent world and tackle down this opportunity in the Canadian market space. So help us, from your perspective, kind of identify what were the motivators that got you to the point to take a fairly significant risk, and then the opportunity that you saw, and how you're sort of seeing Canada play out right now.
Yeah, I had to explain that to my 15-year-old daughter. Dad, you're doing really good. Why are you doing this?
Yeah.
And I basically said, well, some other schmuck is going to do it.
Yeah.
Your dad's a schmuck. He should do it.
Yeah.
There was a bunch of things. What Ryan is talking about is it's more than ETFs, mutual fund products, stuff like that. A lot of the structure in Canada is kind of the old model. A new cultural structure has to emerge. And the advisors want it. The advisors are looking for education. They actually want to take these things on, but they don't know how to actually embrace ETFs in the way that they should. So when we are thinking about SmartBe, it was not a product company at all. This is an education company. I got educated by one of the probably best companies in the business on how to actually act as an evidence-based advisor, because you are culturally speaking very different to your customer. The problem the traditional business has is a wholesaler doesn't have the time to do that. And so SmartBe was very much about, not only were we going to bring the top academics, but it was how do we educate the advisors. We believe advisors have the hardest job in the world, and we want them to thrive in this new market. I firmly believe what Ryan is saying. They're not going to touch passive ETFs, but active ETFs are perfect for them to go and build their businesses with. So.
Okay, so why don't we start to wrap up here, and let's just kind of do a rapid fire. If you're one of our audience listening to today's conversation and you want to learn more about active ETFs and you want to start to become informed and make a good decision, whether you're in the advisor space that's looking at your book and becoming discretionary, or whether you're a high net worth individual that is hearing a lot about ETFs and trying to separate the wheat from the chaff. Top 10 things. Why don't we just popcorn brainstorm advice to the listenership or the viewership as to how to get yourself immersed and start making better decisions. Art, I'll put you on the spot while we're looking.
Yeah, I think that the revolution that's coming is ETF is a vehicle. So just think of it as a wrapper. The first vehicles were very passive index funds, and they were super cheap. They didn't really do much. I mean, you're just following a benchmark. So what was sold to the consumer was, wow, there's this super cheap thing. So I guess when people look at ETFs, they're like, well, they better be super cheap or they're not good. That's not the truth at all. The revolution that's coming is we're taking the active strategies and putting in the ETFs. Now, what is that going to do? Right now in Canada, it's hard to tell whether you should pay 50 basis points for an active manager, 2.5%. When active gets in the game, basically it's going to show transparency on the pricing. So what customers should be looking for is looking for active ETFs for a good portion of their portfolio. It's just a better way to do what we used to do. So I would start there, and then on top of that, you get all the things, transparency, you get access to academics, all of those things. It's amazing what we can do in these things now. So that's kind of where I would.
So look for active ETFs. Wes?
Now you're looking for kind of like resources and things you can do to just learn about the space.
That would be true.
I mean, I'd say, well, you'd probably go to the conferences. Like SmartBe has conferences where you can show up and learn about ETFs and, meet people like us and you guys where you can actually just talk to someone. The old-fashioned way. I always recommend that one. There's a lot, and there's obviously tons of great websites. There's, ETF.com down in the States is very popular. They always have articles about the industry. It's very easy to do research. Our blog, it's a little bit higher level on the geek scale. But if you're an engineer, you're into this stuff, like we post 3 to 4 articles a week on factor stuff. There's also like social communities, like there's a thing called finance Twitter, where on Twitter you start, following like Ryan or I, then you follow our followers. There's a very good community of people that are trying to help, advisors and individuals try to learn about ETFs, but again, from a human, because sometimes it is hard to learn from just, read this blog.
Yeah.
So I think those are some of the good resources to try to get your, feet wet at least.
Is there anything you'd avoid? Is there places where misinformation is difficult to decipher?
I would avoid mainstream media. I would avoid actual sponsors where, they're clearly not about ETF, or they're just, what's their core beliefs? Are they transparent, evidence-based and finding win-wins, or are we're proprietary, black box, like nice. You have to call us up to learn more. Just you'll be able to tell the culture of whoever you're trying to get educated from pretty quickly, I think. So just try to find resources where they're basically doing what the ETF industry culture is, like nice. Trying to help out, educate, and be transparent.
Terrific. Ryan, anything else from you?
Yeah. Well, following up on Wes, you want to find people or sources that will give you both sides of it, right? If anybody just dismisses the other side, says our side is only good, right? And then they can't tell you what the bad thing about what they're doing is, because there's always a bad thing. There's always a trade-off in life. If McDonald's tells me they can serve me the same burger that, Peter Luger's Steakhouse, the #1 steakhouse in the world in Brooklyn, New York, can serve me, like, I'm like, that can't, like, how? Or like, you maybe, but how?
Yeah.
Right? Mm-hmm. So if somebody's telling you everything's good, nothing's bad, okay. And if somebody tells you about somebody else, like if you're talking to somebody else and they're saying SmartBe, well, they're too small, now everything's bad. Well, you want to find somebody that dismisses SmartBe, but here's the benefits of SmartBe. Yeah. That's probably an honest person, because there's absolutely benefits over bigger companies working with smaller ETF companies, right?
Nice.
So
really great
find
advice.
that. Yeah.
Any seminal books, like if I'm sitting out there wanting to read something, is there one place that's maybe Wes, if you could go on a deep book, and Art, if you could go on a light book for a non-quant geek, a geekier book and a less geeky book?
Yeah, I think Larry Swedrow's Factor book is a great place to start for everyone. A buddy of mine wrote, Keith Matthews, the Intelligent Investor, he's written a beautiful book. I don't think I didn't get the title right, but I think it's a great place to start to even think of these kind of values and why you want them, because I think, some of the stuff that's old hat in the state is new in Canada, like global diversification and some of these things, and he wrote a great book for Canadians on that. So I think anything by Larry Swedroe is going to help any investor. I think I learned so much from his stuff.
Awesome.
Yeah, I was actually going to recommend, if you don't, you want to get a little bit of geek but high level summary, Larry Swedroe and Birkin's book on factors, like your book about factor investing is excellent. Actually,
that's the first one that Art gave me.
Yeah, we have copies. I give it to everyone because if you just want a quick intro, I mean, there's other people also learn via different mechanisms.
Yeah.
So I actually recommend a lot of people get on the podcast, like Meb Faber, Pat O'Shaughnessy. Preston and Stig, I think it's called Investors Podcast.
Corey's done some beautiful work.
Got one.
I think that's an amazingly new tool.
Those are really good.
Like to hear even to read is one thing, but then when you hear the guys talk about their strategy on a podcast, I think that's been the most fascinating new developments in the field. So.
And we've learned that too, because we've always been done our communications via written word, and we still always will. But we've also found that some people like just powering through written word is a total pain train.
Yeah.
And so what we'll do every week, Ryan and Jack will do a video kind of summary where hey, what's the main point? Give me the quick hits. And you get to see people, they give context. So I think reading pods, you got the bear. I think just depending on what kind of learner you are, just try to access the resources that'll help you most.
Awesome. Well, this has been terrific, guys. I really appreciate your time. And we're up here today hosting Alpha Architect in Calgary. It's sort of our launch party for the launch of our ETF, SBEA. It's on the NEO Exchange. Wes and the crew, they run the index down in the States, and Art and our crew, we package it and make it Canadian and make it easy for folks to invest. If you're interested in any information, contact us at info@smartbe.com. There's also some information on our website at smartbewealth.com. Thanks very much, folks, and have a good day.
Thank you.